Sonko's Day with the authorities. Will the former Nairobi governor be set free, or will continue to be held at committee maximum prison? We are keeping an eye on that development. Good morning. This is Biz Check. We are live from Broadcasting House. A look at the latest in the world of business, sports, as well as general news is coming up right here. This is actually a comprehensive coverage. My name is O'Brien Kimani. At O'Brien Kimani is my Twitter handle. At KBC Channel 1 is the Twitter handle that we request you to use to get through to us. In the next 2 hours or so, we shall be having interesting discussions here, from the housing industry to the textile and apparel sectors. We'll be looking at the dynamics, following the disruptions of COVID-19 and how the markets are readjusting themselves. This is Biz Check. And of course, our reporters are spread around the country to keep tabs on what is happening in your counties. Let's first of all have a look at the reporter's diary. Yes, we are still working on the reporter's diary, but let me take you through some of the issues that we are following out today. The Ministry of Water is expected to sign or to engage in contracts signing with a number of investors in a bid to expand water access in the country, which currently stands at about 57%. The whole plan is to ensure that there is 100% water coverage by the time we get to the year 2030. Some of the projects being undertaken include, the dredging of dams and, of course, the construction of new dams. And just last week we saw the government actually say that the construction of the 32 billion shillings Itare Dam that was halted back in the year 2018 is expected to start once a new contractor has been brought on board. And that dam is expected to help about 1 million people in the Rift Valley region to have access to clean piped water. Another development is the Karimino Dam, which is 24 billion shillings, under construction in Kiambu County, is expected to start operations by the first quarter of the year 2022. Another huge development there, which has a capacity to have or distribute water to about another 1 million people, not only in Nairobi, but in Kiambu as well as Murang'a County. So we'll be keeping an eye there. Some of the stakeholders involved, the Water Fund, as well as the World Bank and other interested parties. The government spokesperson is expected also to address the nation today from Kilifi County. Among the issues expected to come out is the question of coronavirus vaccine. We have heard, from the Ministry of Health that they're expecting about 1 million doses, before the end of this month. We're still trying to find out, the distribution and inoculation modalities and how would all these pan out, and future vaccines. Bearing in mind that we have seen also Chinese drug maker Sinopharm also throwing their heart into the ring and saying, hey, look here, we're also willing and we have the capacity to provide you with a vaccine. Those are some of the issues that we expect the government spokesperson to address. And the World Cancer Day celebrations. Oh yeah, the world is celebrating the milestones, covered in the curing as well as the prevention of this deadly disease. We'll be finding out from regulators and as well as players in this industry what's the latest in terms of technological breakthrough in dealing with cancer, as well as prevention measures and treatment as well. Bearing in mind that cancer is actually one of the most expensive diseases to treat. And there are estimates that treatment of cancer costs the Kenyan economy about 50 billion shillings every year. That's quite a monumental amount of money. So we'll be checking out to see what is the latest. And of course, I told you, we're also looking into the issues around the real estate sector. Joining us on the set this morning is Shiv Arora. He's the CEO of Superior Homes. a company that started way back in the year 2014. And he has been in this industry now for almost 10 years now, so he definitely has quite a tremendous amount of experience and insight into this real estate industry. Shiv, thank you so very much indeed for finding time to be with us here.
Thank you, Brian.
I want to hear from you. The real estate industry, has gone through, turns and twists, through booms and busts in the last 15 years or so, but nothing is like the pandemic that we call, the coronavirus. How has this virus impacted this industry?
Thanks, O'Brien. Definitely, look, since around 2018, it's been a difficult operating environment in the Kenyan economy. We saw the interest rate cap, we saw reduced credit to the private sector. We have seen, banks coming in with IFRS 9, which means that, they've got higher provisioning levels in terms of lending to the real estate sector. And that generally caused a slowdown within the sector as well. In terms of COVID, it was something that no one anticipated. From a real estate perspective, getting into the year 2020, everyone thought that, we're putting away the difficult times from 2018 and 2019, and we're now going to have a year for growth within the economy as well. But obviously, these are things that you can't expect, and you just have to figure out how to deal with them. They did affect the real estate sector tremendously.
Yep.
If you look at it, there was a period where, Lands Office was unable to do any registrations, which means banks were not able to release financing to developers. On the ground, you've got to have social distancing, which means you have to reduce the pace of your construction or increase the labor count, which obviously makes it much more expensive. People cannot come and do site visits, which means that it's difficult for actually someone to buy. And when it comes to the purchase point, people will turn around and say, well, okay, I was going to make a real estate purchase this year, but I'm no longer sure about, the future of my business, my employment, so we'll hold off. So it was a difficult year. For us at Superior Homes, we've been in business since 2005 and been developing real estate since 2005 for the last 15 years. So luckily for us, given that we are both the contractor and the developer as well, we were able to scale back operations. And at the same time, we were able to sell off inventory that we had, so that we were not selling any off-plan units. We were selling, new completed units back into the market. And that lasted for a period of about 4 months. But then we decided, this is not going to go away anytime soon. So we just have to continue on with the way it was. So we put shovels back into the ground and continued building.
And even before, coronavirus, as you have just mentioned, the industry was going through some sort of a crisis, starting in the year 2018. And this was, in the year 2019, was occasioned by, of course, the capping of the interest rate, as well as the aftermath, the violence, that followed the election back in the year 2017. And so it has not been, a smooth sail for the industry. Which sector has been hardest hit? Is it, the commercial aspect of the real estate sector, or is it, houses for occupation?
Residential will generally do well in an economy for as long as you've got a certain number of demographics which are driving you going forward. If you've got a growing population, growing middle class, urbanization, residential will generally do well. And especially residential that focuses on the growing middle class within the Kenyan economy, because then it's a demographic play. Definitely the commercial office sector really, really struggled. You're looking at about 5.2 million square feet worth of oversupply. But again, it's within certain spots. So anytime you're going out to do a real estate development, you have to take a look back at the market, do your research, see where am I going to get yield, where am I going to get occupancy, where am I going to get capital appreciation, where am I going to get total return. Commercial office has obviously been hit. It's been hit hugely during the coronavirus pandemic as well. But still continues to be resilient. As the economy grows, people will demand more and more office space. So the hope is that demand finally catches up to where supply is, and developers are taking note of that as well. In terms of the pure commercial office that they are putting out, if you look at developments such as Yaya Center, you know, the 14 Riverside, these are good developments because the commercial office has a mix of retail, it has a mix of residential as well. It's got serviced apartments, some hospitality. When you have mixed-use developments like that, then they generally do well. So it really depends on where you're going to pick your spots and what you're going to do. But residential has done well. I mean, looking at it from a Superior Homes perspective, coronavirus actually, we saw a lot of interest towards our development, Green Park Estate, which is in Athi River, because it's not apartments. It's at a very affordable price point, you know, from 9.9 million going upwards. But you have your own plot, you have your own garden space. You're not close to anyone. You can work from home in a very peaceful environment. Your kids can play outside without getting close to others. So there's aspects of positives and negatives which you have to take from.
And I mean, you're talking about, you know, having, you know, hate and interest, you know, around Superior Homes. And how did you manage to perform above the market performance, if I'm allowed to say so, bearing in mind that, you know, there was a huge slump in demand as well as in supply?
Look, we're a very conservative real estate developer, so we have no external debt on our books, which is very different from majority of the real estate developers here. So we didn't have to renegotiate any contracts with our banks. We also have a different model where we're both the developer and the contractor. So when we have demand, we build. When we don't have demand, we slow down and we keep a certain level of inventory, at least $5 to $6 million worth of inventory in our books, which we can continue selling. That actually got us through the pandemic because we were able to scale costs down. We had no houses which we had not delivered to clients, so it was really just selling off the inventory that we had. And then when your inventory level gets, you know, to a lower level, you start building again. And I think that business model helped us. It's obviously not got the pace that other real estate developers have. You know, they can put up 500 units in a couple of years, 2 to 3 years. But our business model has proven to be resilient in this market. And our concept of just doing master plan gated communities rather than doing apartments or anything of the rest has helped us as well.
You know, when you look at the market, you realize that, you know, we're almost getting to saturation levels, you know, especially here in Nairobi, whereby you have a huge glut of commercial as well as residential units. But the concentration has been on the middle as well as a high-end market. This has always been, you know, a challenge. Where do you think, you know, growth will come from?
I think you're right. If you look at Nairobi, and especially considering the CBD and what were generally considered to be the hotspots or the nodes in Nairobi, there's a lot of developers competing for the same demand in that market. There's a lot of commercial competing for the same demand. There's a lot of retail competing for the same demand. But if you look at where infrastructure is going, so if you look at, you know, SGR, if you look at the roads that are being built, all across the countries that are opening up counties as well, it's really, really helpful because we're starting to see a lot of demand move away from technically Nairobi towards, I would say, the Nairobi metropolitan area, you know, 40 to 50 kilometers away from the Nairobi CBD. You're looking at counties, Nakuru, Eldoret, Kisumu, you know, places like Naivasha, really, really growing. Kilifi County, you mentioned, we've got a development there called Pazuri. There's developers such as Vipingo Ridge, there's Centum in that market as well. So starting to take a lot of interest in the Kenyan counties as well, driven by infrastructure. When people used to talk about urbanization, it used to be people moving from counties back into Nairobi. But these days, urbanization is happening at a county level, which is creating a lot of demand for real estate. So as long as there's continued growth, yeah, we will see demand.
The fact that, you know, the world is still trying to figure out how the world will look like, you know, after the coronavirus is done and dusted, you know, means that, you know, there is a lot of uncertainty, you know, going forward. Number one, millions of people have lost their jobs. You know, banks are not willing to lend. And when you look at, you know, latest statistics from the Central Bank of Kenya, you see that, you know, the number of, or the level of NPL, you know, has jumped slightly to about 14% of all, gross loans issued in the country. So this tells you that the months and the years ahead are likely to be difficult. And so you sound completely bullish, going forward. Are you basing your positive outlook on any fundamentals?
I'm not bullish, no, on going forward. I'm just saying developers have to be resilient going forward. You have to restructure your business. You have to look at your operations.
How do they get resilient?
You have to look at your debt levels. You have to look at, can you phase out projects? What capital can you commit into the ground now versus what can wait? Do you have demand for a product that you are putting out into the market? And not punters demand, but true demand in terms of offer letters, sale agreements, before you're going out and doing a project. Is this year going to be tough? For sure. I was reading a World Health Organization report which said that, we're likely to be vaccinated by mid-2022. And we're actually one of the leading African economies alongside South Africa to be getting there. So it's another 1.5 years of this. And then obviously we are having discussions with regards to a referendum. We're having an electioneering period in the year 2022. None of it bodes well for continued growth. So, but what do you do as an entrepreneur, as an investor, as a developer? I think you just have to say, look, this is the economy I have. As long as I'm cautious with regards to my dealings, making sure that I'm not committing too much capital into the ground, should be okay.
What about the projects that are currently ongoing? And I know there are massive projects that are currently underway. If you just walk around Nairobi, you just go to Tatu City, mega projects coming up there. If you go to Konza, the same thing. If you go to Centum, when you look at Centum, the Two Rivers project, is coming up pretty fast. And this is just but a taste of what you see around the city of Nairobi. Are we likely to see a situation whereby companies are likely to go into foreclosure because of bad business?
Look, what this difficult time all the way from 2018 till 2020 will weed out your everyday developers, and you'll see institutional developers start to prevail. I mean, you're talking about Superior Homes, Centum. We're institutional grade real estate developers. We've done our homework. We have the capacity to deliver in the market. Two Rivers is doing well as a concept. Konza City is now starting to pick up, though we still need to see a little bit more activity before I think everyone is sure that this thing is going to work. Tatu City, from obviously where the readings are, it's selling. So there is obviously demand in the economy. I think where you'll see a lot of businesses, especially in the real estate sector, struggle are those that are not institutionalized. Those that have just been doing your everyday projects without actually thinking about institutional grade standards, delivery, client agreements, and the rest. And those will obviously struggle coming in because institutional developers are putting a lot of capital into the ground.
Look, I mean, the country has somehow, gone into electioneering mode, and we from historical trends, we have seen that, when Kenya gets into any electioneering cycle, somehow investors, become a little bit jittery. And economic growth somehow slumps. And so you do not expect, the next 1 or 2 years, to be good, economically speaking. So where do you see the rebound coming from?
It's definitely going to be a difficult next 2 years. Look, 2021 is going to be recovery from the pandemic. And until people start to get vaccinated, this is our new normal. 2022, we're back into electioneering. So from the end of 2021, really it's just an electioneering period. Where are you starting to see growth come is really from 2023 going forward. That's when you're going to have true growth, and hopefully everything goes smoothly.
2023.
Yeah.
So you're talking about 2 years from now.
Yeah, and until then, people just have to sit tight and hold on. If there is,
how will the market? How will play or survive in this industry?
It's going to be difficult, but I think 2020 taught a lot of people how to restructure their businesses. You know, where can you cut costs? Where can you increase efficiencies? Where can you phase out projects? What capital actually needs to go onto the ground versus what can wait? Those sort of capital allocation decisions generally help businesses when they're struggling. It's unfortunate that a lot of people, you know, have also lost their jobs and suffered because of it. But I'm sure that, you know, come 2021, come 2022, come 2023, we will start to see, you know, growth pick up. Where we need to get to as an economy is have 10 to 15 years of uninterrupted economic growth, because that will really be a differentiator. If you look at what they call the Asian tigers, you look at China, you look at India, you look at, you know, countries out west, those are countries that had 10, 15 years of uninterrupted economic growth. None of this start-stop.
But where would you get that in Kenya?
It's going to be difficult. Hopefully, I'm sure you should read the news just as probably more than I do. So you're seeing, we're trying to create a mentality where, you know, it's not winner takes all, and let's see where it goes from there.
Also, are we also likely to see some sort of, you know, price correction, you know, in the market? And one thing that, you know, has baffled investors for quite a long time is how, you know, a bungalow, for example, in Lavington will cost almost the same as, let's say, in Manchester, in the UK, or in New Jersey, in the United States. And bearing in mind that, you know, infrastructure development in these two countries, you know, or in these three countries, you know, is completely different. So there's a lot of, you know, price speculation, you know, driven by speculation as opposed to fundamentals. Are we likely to see correction, you know, going forward? I
think you've already started to see correction in the market. Developers are offering discounts. People are doing deals that they wouldn't otherwise do. People are giving extended payment plans. You know, people are taking longer to collect on their cash. There's a lot of offers floating around the market as well. So you are starting to see a correction. You know, Knight Frank report correctly pointed it out as well. There, especially in high-end residential, there has been a decline in terms of price points. So ultimately, and when I'm always asked the question around price, it's ultimately demand and supply. If people are willing to buy a bungalow at the same price that they're paying in Manchester, so why should a developer not sell it at that price point?
But it ultimately at what point, I mean, yeah, I mean, you know, these are, you know, the modern day economics of demand and supply. But at some point, you know, I mean, you also have to be very careful, you know, not to outprice yourself.
Of course, you know, you have to be very careful not to outprice yourself out of the market. That's the check. At what price point do I stop seeing a reduction in my inquiries? Do I stop seeing reduced footfall? Then do I just have time wasters coming in and viewing developments? So, look, you've got to be in line with market. And if you've got a superior product, then that's reflected in your price point as well. There are areas that I would say from 2008 till 2018 grew, you know, almost exponentially in terms of their price points, and those are now starting to struggle because they're not able to move units at the same rate that they used to move them before. So, are you seeing a correction? Will the correction continue? For sure. Is it speculation? I don't think it's speculation. It's a lot of it is driven by infrastructure, and you know, the boom years that we had in the economy between 2008 and 2018. I would say speculation comes across when there's debt in the market and there's not a lot of credit extended in the real estate sector, contrary to popular belief. You know, we've got 22,500 mortgages in a country of almost 50 million people. It's not even a percent. And debt at...
But you see, 70%, almost 75% of these mortgages are in Nairobi. And this is why you have, you know, the highest speculation or you know, prices that are not supported by any fundamentals.
I still wouldn't get to the point where it's not supported by fundamentals. Even if 70% of them are in Nairobi, that's only 13,500 mortgages in a county that has a population of 4 million shillings. So you know, speculation based on credit is and pushing it, because when cost of credit is at 13, 14%, it's very expensive to speculate. So a lot of these mortgages that you see are actually people who are servicing mortgages and buying homes. So is there going to be developers taking a step back and saying, what do we need to do to just make sure that we continue to remain competitive in the market? For sure. It's a buyer's market right now because people have the pick of the bunch. You're getting good real estate, you can do a deal, you can get a longer payment plan. So, yeah, it's the way it's going to be for the next year or so.
Mm-hmm. When you look at, the real estate sector in this country, I mean, you realize that, the growth is just centered in about 4 or 5 counties, and I'm talking about, Nairobi, a little bit of Kisumu. Then you have Nakuru because of Naivasha and the surroundings. Then you have Kiambu. Then you have Mombasa, and a little bit of Machakos County. Where do you see growth coming from, going forward, apart from, those 5 or 6 counties?
I would actually say those 5 or 6 counties.
They still continue to drive the growth? Yeah,
because if you look at a market like Nakuru, for example, there's huge opportunity there, and there's really no institutional real estate player who's dominating that market. If you look at Naivasha with the infrastructure, the ICD, the SGR, then the narrow gauge railway, it's going to create a lot of demand there as well. Kisumu will start to do well. Mombasa is a difficult market. We're starting to see a lot of growth in Kilifi County. Mombasa County has generally not had a very vibrant real estate sector, but it can only pick up because they've had a difficult 5 or 6 years. Kisumu County still needs to, it's largely been a consumption-driven county, so moving more towards an investment and real estate-driven county, and we will see a lot of growth there. The governor is doing some good work. Infrastructure is coming up. Eldoret is another very, very exciting opportunity that players are looking at in terms of a county level. Yeah.
Very well. Listen, I mean, we're having a great discussion here in the studio. We're in the company of Shiv, Arora. The discussion centers around one of the basic needs of human, and we are talking about the housing sector in Kenya, where growth is coming from, and where we are likely to see sustained growth going forward. We are watching us from Broadcasting House in Nairobi. A short break is well deserved, and thereafter we are back with more. Stay right here.